look at the process of submission of financial statements, entities and departments are required after their 31 March year end. They are given 2 months to prepare for the audit, which means they must submit their prepared financial statements by no later than the 31st of May. On 1 June onwards, those financial statements are regarded as submitted to us, meaning that they have complied with the requirements of the PFMA insofar as the submission requirements are concerned. So when we look at them, when they submit them to us, they are now submitting them to us for purposes of doing an independent evaluation. So as we are doing the independent evaluation, we also come across situations where somebody has recorded a vehicle as a building, for example. So if you see this in the financial statements reflected as a 2 million rands building instead of a vehicle, we then point it out to them and say to them, do you realize that in your books you've got 2 million recorded as a new building acquired, when in fact you know you bought a car? So we then say, here's your accounting transaction that you process. Please correct it if you are going to achieve fair presentation. Let's also remember that the financial statements that we audit, if you look at our audit opinion, it clearly says that these financial statements belong to management. It is the responsibility of management to present these financial statements in a manner that is fair as best they understand them. So it's not our financial statements. All we're doing, we're saying, do you realize that you have put something in building instead of vehicle? If they want to achieve fair presentation, then they correct. That's what we mean when we say corrections of misstatements made during the audit, because they are made during the time from 1 June to 31 July. When we receive them from them and they are completely wrong, we don't leave them and not allow them to correct them. That's the level of correction that they are allowed to do. So there are extremes in certain provinces. When we go around and speak to our staff, they will tell us that the financial statements that were received on 1 June were so incorrect that it was almost rewriting the whole set of financial statements, not by us, but by them. All we do as an independent evaluator, we point them to the errors that we are picking up while we are doing the audit. And therefore, the ones that, had it not been for that allowance in that 2 months, what we are saying is that instead of 80% of them achieving unqualified financial statement or opinions, it would have been 43%. So what that message says is, if you look at the quality of the financial statements during the course of the financial year as they are doing their activities, a lot of them are substantially incorrect, and they are saved only through that 2-month process when they are being audited. So it is not the auditors doing it for them, but it is a natural process of an audit to highlight these errors to the auditee when they are highlighted in the audit.